Okay, part two. So again, today, part one, you should have. Um, I did a review real quick. I want to go over one more thing too. RB asked a real good question right over here in finding the expected move. So I just replied to him, but basically, let's go to preview one here and let's go page down. Okay, here's the response. I asked the video on, and I asked the research team how to calculate the expected move, and as you can see here, he answered right around here. Email. You can take the stock. Oh wait, hold on, right here. The at the money straddle is priced at $5.21. $5.21 says times it by 1.25 equals 6.52. Well, when I tried this on Thinkorswim, when I tried it on Doe anyway, and I don't know if it's because the Doe numbers are wrong or whatever, but when I went on Thinkorswim, I did the same math. It didn't quite come out to the expected move. What he's saying is you can take the SPY right here, find the at the money straddle. Okay, so here's November 14th expiration date, and if I want to find the expected move for this, look, see it's $8.40. He says you can go to the at the money straddle, which is right here. Okay, click on the bid, right click, go to sell and do straddle. Whoops, sell and do straddle. Okay, and that price is $7.49. You take that number and times it by 1.25. So what the hell was that? 7.49 times it by 1.25, and that should be the expected move. As you can see, the expected move, if you do it that way, it's $9.36. It doesn't quite match this number, right? $8.40. So what I did in my post was I took 7.49 and just multiplied by maybe I tried 1.125 to get it closer, and that came down to $8.42, which is a lot closer. Okay, so that's the number I used. So I just kind of wanted to clarify that as we go. All right. So I want to go on to you guys have all been following. If you guys have been following my posts, you folks kind of know what I've been going over. So let me just do a real quick hidden monkey update here for today. As you can see, I was hoping for a little rally. One is because it's vol collapse right here. Okay, see it's nice. Look, it's at 50. So look what it did, right? Okay, see. Let me kind of give you an example. Remember earlier? Okay, let me. I'm sorry. I don't want to confuse you folks. Let me start from the beginning. As you recall, I started selling. I've been selling premium even when it was above 35. I started selling premium. The problem is when you sell premium and it moves up, the IV rank or implied volatility rank moves up. Any positions you had on earlier when IV rank was lower, it gets tested. But of course, if you sell IV rank when it's up here, it can't go any higher than 100. Okay, it can't go any higher than 100. So it's a lot easier to create a winning position. All right. So remember I said, hey, if you guys didn't put on when IV rank was up here, this was on October 13th, put it on because IV rank in the SPY does not stay at 100 for very long. And look, sure enough, one day went down, popped up, it stayed up only there one day, and look what happened. Vol collapse, right? So all these position golden geckos are all profitable for sure if you guys did them. On balance volume, like Tom doesn't believe in technicals. I don't either really. I used to use them for swing trading, but a lot of people use them, so I like to use it so people can use it with their strategic trading, with their golden geckos. It just helps a little bit. All right. So when I put on all my position, I was kind of bearish, so I did skew them to the downside. Okay. Hoping that it'll stay within that range. I did not expect this strong move right here, though, but it happened. I talked about how the Bollinger Bands can expand when it's skinny like this. Look for a strong move, and I guess I was just expecting the bulls to hang in there a bit. But either you've been following me. I'm doing okay. I have a 185 short put and a 190 short put that both expire at the end of October. And I'll go into that later, and they're coming in nicely. Okay, so back to this. Remember when I talked about IV rank? When was the last time IV rank was at 100? Look, February of this year, right? And sure enough, remember, I'll zoom in. Oh, crap. Let me go to auto range real quick here. And then let's zoom into February. And I'll come this way. Where's February? Hold on. right here. And then I'll move this bar over so this way you can see. All right, look, right. Remember I said, hey, get in. Look, IV rank rate 100. It was at 100, basic. Yeah, it was at 100, and it was at 100. IV rank was at 100 on February 3rd of this year, and the market went from a high. It made like a 10% correction, pretty much, right? So anyway, sure enough, IV rank only lasted 1 day, and look what happened. Okay, same situation. So look what happened. Fast forward to today. Okay, from a high of 201.90 down to here. It's over. It's a good solid. What is that? 14. That's a good correction. And then vol popped. I mean, the market came back. All right. Oh, what did I say? So again, IV rank is very important. This is where you can put on a whole bunch of money, put on a whole bunch of positions. Can you still do it? Sure. IV rank is collapsing, yeah. But what you're hoping though is IV rank. You only got maybe 10. Around this 25-15 area. Okay, so you got time. You could put on trades as well, and of course your positions will be adjusted. If you're bearish, skew them to the downside. Okay, skew them to the downside. Let's add that ADX crossover. So I'm going to add the study, all studies. Go to your ADX right here. Average. Remember what I said? Once you see this hit 30, it bounces down. I'm going to zoom out again. Look, the highest it got all year in the last 52 weeks was right around 32 points. What does that say right there? That's around what, 32 point something, right? So it got up a little bit higher than that, I think, right? And now it's turning over. So man, if you see this thing break below 32, okay, and I don't look for this. What that means is this is a strong trend going up. Okay, so once it broke 20, it's pretty much a strong trend. And what was the trend? Downwards right here. So look what happened. It broke 20, like right about 20, right? Once it breaks above 20, they say that trend is strong. And sure enough, you could have got on, look, the trend just went, you could have shorted it right there. But once it turns over, usually the trend is weakening. So we shall see. Like what I told you, I want to stay in the range. I don't care. I like a two-sided market. Why? Because you get volatility pops like this, you can sell it, and then volatility drops. So that means the market will rise. Then it'll drop again, volatility pops, I can sell more, and then, you know what I mean? Volatility drops again, and I collect all that money. And as long as it stays within that range, you should be okay. Now, what Karen does, when she puts on these new trades up here, when the IV rank is high, a golden gecko was 1 standard deviation away. She's going 1.5, 1 3/4 standard deviation away. She's going out to about 90% out the money. So here's what that looks like in dough. You could do a SPY trade right here. Okay, I'll type in SPY here, and they change the look of dough a little bit. Okay, here we go. Okay, and I think I can clear this. These are all my positions right now. They're doing pretty much okay. I know what I was going to show you. Close this up. Here's my positions. I'll go to portfolio. And remember some of those Honu trades I put on? A Honu is pretty much a synthetic straddle. And I call them a Honu because in Hawaii, Honu means turtle. And turtles move very slow. And when you do a straddle, you want that position to hardly move. And you want it to end up in the same place. Okay, so this FXE trade, if you look, I sold the 125 call and the 124 put. So I kind of wanted to stay right above there, right around there. And because I collected so much, I collected $2.07, I think, in the thing. So I've got some new and it's pretty good. I just want the vol to collapse in FXE. So I'm only down a little bit. Look at my VIX trade, my VIX Honu trade, VXX. Look, I sold the 34 call and the 31 put. So they're a little bit wider, but I did that, and I skewed it a little bit to the outside because I was expecting a bear market. And sure enough, this shot all the way up to 40, by the way. So I do want, whoops. Oh, come on. So I do want it to stay, I want it to stay right around between 34 and 31. Right now it's at 35. And the market keeps on rising, this will drop. And as you can see here, I'm having a nice profit. My SPY positions right here Here's my 185 put. Remember, it really got tested. Now I'm up 147 bucks in this. The only other one that's been close to being tested is this 190 position. These expired 11 days, and I'm only down 26 bucks, so I'm ahead of each one. But it's above 190, so you know what I mean. And my one it's where is SPY right now? At 190. So if this keeps up, I'll be in good shape. Okay, and I should be making money in this one as long as the market keeps on climbing, which I hope it will. Now, back to I want to make sure I cover some. I wanted to make sure I cover everything in both these videos. Okay, so that's what I see going on. Oh, let's look at the ES. Here's what happened after hours. I'll type on /ES right here. Hit enter. Okay, here's the ES. Oh, hold on. Here we go. Here's the ES. Hold on. Let's load. I've got 4 more minutes here. All right, here's the ES today. God, look at that vol collapse right there. All right, so of course this blue tick is today, the 20th, and here's what happened after hours, and we're doing okay. Okay, as long as it stays up there, we'll be okay. We want this vol to collapse. Okay, I don't like this weaker trend. I kind of want it to break above and at least give us some room to the upside. I really want it to stay around this middle of the Bollinger Band, which is around 191 or 1919, which is around 191 on the SPY. Okay, so I really want that to do that. So let's only because I want vol to collapse and we can sell more, and my positions would be okay. I have no idea which way the market's gonna go. One thing I do look at is I do the same chart. I just have it on a 15-minute chart. To do that, just click on this D for day or wherever it is, and click the 15-minute sign, and it'll turn into a chart like this. Okay, and then the gray areas are after hours. The dark areas are normal hours. So one thing all these technical guys say is, well, what I do is watch is here. See these gray hours? See how high it got during just a couple of days ago during after hours. If during the black periods, the normal periods, you can break the pre-market highs, okay, it's a good sign. It'll go up. Same thing if it goes below the pre-market lows. So look what happened today. So this is what happened today. This is what it was Sunday, after hours. So the high was about, I don't know, the high was actually Friday afternoon, it was right here. Okay, so then what happened was pre-market it got as high as 1893, right? And then once it broke up above 1893, it's usually a good sign that's a strong trend. So for example, tomorrow we want to see it finish above 1904. I think that was the high after hours. It got as high as, look up here, 1904. So we want to see tomorrow it finish up 1904 above. Then we know the trend will keep on going or not. I have no idea what it'll do, but that's the market wrap. So tomorrow, what you want to look out for is if you're doing, and I use the SPY because that's what Karen, the super trader, does. Actually, does it on SPX, but actually she does it on SPX actually. Okay, which is the same chart. So like I said, my main goal is I'm thinking they want to hold this beginning of the year level. Crap. Okay, so as you can see, my chart here, I drew a line. This yellow line is where we opened up at January, beginning of the year, and I said we want to hold this yellow line. Okay, otherwise SPY will turn a negative for the year. So we shall see. Okay. After October, if these positions close and I close these positions for a profit, I know the 190 put, I'm going to start skewing. Well, then I'm going to want the vol to pop again anyway. But I got to skew more towards the bear side. Okay, because as Karen said, markets crash down, didn't usually crash up except for last year. All right, so I hope this helps. Adjust your charts accordingly. Any questions, give me a shout out on the shout box down here at the very bottom where it says a shout box, and I'll do my best to answer your questions. You guys have a great night.